Hello, I'm Grace. The U.S. government's decision to refund a portion of previously imposed reciprocal tariffs is stirring winds of change in the global trade environment. This measure primarily targets businesses operating within the United States and overseas firms exporting to the U.S. Reports estimate the refunded tariff amount will reach approximately 4 trillion Korean won. This sum is significant enough to directly impact the net profit of relevant companies. The refund process is scheduled to officially begin next month. Companies must submit applications to their local tax office to claim the tariff refunds. The tax office plans to review submitted documents and notify results within 30 to 60 days. During this period, companies face the burden of maintaining operations while awaiting fund recovery. The refunded funds are expected to be mostly used to strengthen internal liquidity through reinvestment or expanded labor costs. Notably, semiconductor companies intend to enhance technological competitiveness by increasing research and development expenditures. The automotive industry is also expected to restore cost competitiveness through reduced parts procurement expenses. Markets interpret this as a corporate support measure and a signal of easing trade tensions, viewing it positively. In fact, related stock prices have risen slightly, reflecting a positive market response. Since tariffs directly erode corporate operating profits, refunds offer immediate improvements in management. There is also potential for indirect price stability from an inflation perspective. Reduced cost burdens on companies may alleviate pressure for consumer price increases. However, concerns remain that the complexity of the refund process could pose a major barrier for small and medium-sized enterprises, SMEs. Detailed administrative procedures and document preparation may burden SMEs with limited resources. There is an urgent need for systematic guidance and improved support systems at the government level. This move is also interpreted as a signal that the protectionist trend is subsiding. As barriers to entering the U.S. market lower, Korean firms are expected to find overseas sales easier. In the long term, this is positive for restoring global trade confidence alongside the easing of U.S.-China trade conflicts. Nevertheless, it is crucial to monitor whether this is a temporary policy flexibility or a structural change. Beyond short-term corporate support, observers must watch whether trade environment normalization persists. Companies must efficiently deploy refund funds to transform them into mid- to long-term growth drivers. The government must enhance procedural transparency and accessibility to prevent SMEs from missing out on benefits. Stabilizing trade relations with the U.S. is a key variable amid the reshaping of global supply chains. Future directions of tariff policy could influence global investment sentiment and exchange rate fluctuations. This Refund Act serves not only to improve corporate operating conditions, but also as a diplomatic signal in trade. Related companies and investors should closely track the progress of the refund procedures. SMEs should prepare to maximize refund benefits by seeking expert advice. Attention is focused on whether this trade environment improvement will lead to substantial economic stimulus. Continuous monitoring is needed to ensure policy effects do not merely result in short-term statistical improvements. The U.S. government's move could serve as a critical turning point in reshaping the global trade order. Companies and the government must cooperate to respond flexibly to changes in the trade environment. Observers should carefully watch how future tariff adjustments or trade negotiation trends will impact global markets. I'm Grace, thanks for watching.